Good morning, everybody. It's Friday, August 11th, 5:28 a.m. Central Time. Grain market's pretty quiet, mixed trade. It's report day. Matt, Bennett, Mackenzie, good morning, guys. Why don't we
Morning.
start off with the report, expectations, all of that?
So, all eyes will be on the U.S. corn and soybean yield estimates here this morning, which are expected to decline compared to last month as it relates to the new crop U.S. balance sheets. A supply cut is often met with a demand cut of similar proportion. Everyone should be on the lookout for some kind of market volatility here this morning. The report's going to be released here at 11 Central Time.
It's like Christmas morning, except the presents usually suck. Matt, so we're expecting yield cuts here. What does a bullish report look like today?
You'd have to get, I don't know, south of 175 on corn. I would think. I mean, beans are going to have to be, I don't know, closer to 50. I mean, I don't know, Joe. If it's as of August 1, yes, I think there's yield cuts, that are coming. At the same time, I don't know. I just talking to a lot of growers, obviously a lot of good weather over the last few days. So I don't know if the USDA is going to be more of a here and now or as of August 1. They're supposed to be August 1, but it seems like the last couple 3 years they've said they're taking into account everything up to the report. So I don't know. Be interesting to me. I think you're really going to have to get a yield cut though without them doing much to demand, which wouldn't make any sense to me at all, especially on corn.
Okay, you kind of read my mind in terms of the methodology. This is what USDA wrote in last August's crop production report in terms of the methodology. They said this: farm operator surveys were conducted between July 25th and August 8th to gather information on expected yields as of August 1st. So that's kind of confusing. The surveys went through August 8th. So if you're a farmer and you respond, you're supposed to answer what your crop would have been as of August 1st, because here's the deal. You had this big rain event, which was like last weekend. It was like August 4th through 6th. So if this rain event is not reflected in the estimates are garbage. They're old news. I mean, this was a big time widespread rain event with big amounts and big coverage. And if it's not reflected in the numbers today, then the numbers are no good, correct?
Absolutely. I couldn't agree more. And that's why I've told folks, I was down in Louisville talking to a bunch of growers this week, and I just said, you know what, if this is a bullish report and you're someone that's just received 3 inches of rain on your bean crop and you're not looking to sell some beans, I don't know. I just think you're missing the point. And so, yeah, absolutely. I think that if you get a bullish report based upon yield, it will be old news. It'll be sold very quickly, in my opinion. So I don't know. It's gonna be fun to watch, regardless. But I don't look for, I guess, a massively different report than what we're expecting. I'd be a little bit surprised, to be honest.
I don't think it's fun. I hate report day. It's my least favorite day every month. I don't like it. I've seen too many of them. Like I'm just jaded. I'm jaded. I've seen too many of them. Ending stocks. Do you have any thoughts there? I mean, my thought is that like Mackenzie said, typically if you get the supply cut, you get the yield cut. They're probably going to cut demand. Like, how do you get a bullish carryout number
Good
for
question.
new crop?
Good question. Let's say you drop yield. Okay, drop yield. What are you going to do with exports, like corn exports? I mean, I don't know. I know we can get caught up. I get that. Yeah, we had a decent little week here this week, but I mean, we need some pretty seriously good weeks of exports to start feeling good about a 2.1. I mean, I don't know that that's in the cards right now. So my personal opinion is, you'd have to get below the average trade guess, in my opinion, to really get this thing to be what you would call a bullish report. So how do you do that? I mean, basically, you keep exports strong and you drop the crop size, which most people are going to discount. I don't know. As far as ending stocks go, I think you have to get to like a 2.1, and I just don't see it happening. I mean, it could. Nothing would surprise me on report day, quite frankly, but that would be a head scratcher, I guess, to me. I just wouldn't understand why they would do that. But my personal thought is if they drop yield, they're going to drop U.S. exports as well.
My thought would be that I think the algos trade the carryout numbers. I do, but at the same time, the carryout numbers are just educated guesses at the very best. Even your production number right now is just an educated guess at the very best. And then the demand side of the balance sheet is even more of a guess, because you're talking about demand during a 12-month period that doesn't even start till September 1st and ends more than a year from now. How are you supposed to project demand during that period. There's so many things that could change. You got a whole South American growing season coming up. You've got Russia, Ukraine. You've got another U.S. growing season that you get into during the marketing year. I mean, we start planting corn in, March, April, and that's still during the same marketing year. So there's a lot of things that USDA, just through no fault of their own, they just can't know right now when it comes to demand. These are just the best. It's the best that they can do right now, given what they know, I guess. What about weather? We got some rain on the radar this morning.
Yep. Overnight rainfall moved over large areas of Minnesota and Iowa. The system is working its way toward Wisconsin and Illinois early this morning. Rainfall will be scattered across the Corn Belt during the next 7 days. Some pockets will stay dry, while others will see amounts up to 1 inch or better. The 6 to 10 and 8 to 14 day outlooks call for below normal rainfall and above normal temperatures for much of the region.
So the 6 to 10, 8 to 14, I mean, that takes you out through the third week of August. If you guys are in Minnesota, if you're in Iowa, I think Wisconsin and Illinois are going to catch some of these rains later. If you caught rain overnight, drop the amounts in the YouTube comments here. But this system this morning is probably not bullish. And I know southern Minnesota has had some problems. They've been dry in some of those pockets.
Yeah, absolutely. Some of the guys like south of I-90 are saying that they're in really good shape, but you get north of there, and I think you get into some areas where some of these guys are awfully dry. So I don't know, Joe. My personal thought is that last weekend's rain, as you showed on there, I mean, it's pretty widespread.
It was.
Yeah,
It
and you're
was.
talking some pretty big amounts. And so, with that being the case, I know some people are going to hate me saying this, but I do think that a lot of people got pretty close to the finish line last weekend, and an 8 to 14 day that's warmer and drier is exactly what some people are kind of hoping for if they're a little bit farther along in production. So I don't know that this is a real bullish forecast. Now, I have no position on, it's not, I'm not trying to talk that way, and I'm a producer as well. So I don't like to see lower markets. It's just, I don't know. I don't think that this is a bullish weather setup right now. I can't make it a bullish weather setup in my mind anyway.
All right, here's something.
So USDA released weekly drought monitor data yesterday. A wet start to August improved drought conditions across the Corn Belt this week. Above normal precipitation was reported in Missouri, southern Iowa, Illinois, and Indiana. A lack of moisture in Wisconsin intensified drought conditions. Beneficial rains fell across the northern plains, resulting in improved conditions in areas of Nebraska, Kansas, and the Dakotas. However, a lack of precipitation caused the drought area in northeastern North Dakota to expand. So when we look at the percentage of areas here in the U.S. Experiencing drought, corn country, 49%, soybeans, 43%, winter wheat, 45%, spring wheat, 52%, and cattle country, 37%.
Some of the worst looking areas on here, some of them are some of the same areas that are catching rain just this morning, like that southeast pocket of Minnesota, eastern Iowa. Hopefully this thing moves into Wisconsin and southern Wisconsin and they catch some rains, because that's one of those red areas. So we've still got a drought, but all these numbers keep coming down in terms of percentages. Is the drought just not, is dry conditions like this, Matt, is it not as big of a deal as it was 10 years ago?
My personal thought on this is that if you take this exact same, and I know we can't do this, drought condition, and go 10 years ago, okay, if that was the case, what would happen as far as national yield goes? And I think national yield's 5 bushel better just because of genetics. I mean, some of these genetics excel in what I would call a stressful environment, as long as, of course, you eventually get the rain. I just think you can hold on significantly longer than what you could before. I've been farming. I'm freaking old, but I've been farming since I was 20, and I can tell you that hybrids could not withstand even this year's June. I mean, it was pretty freaking dry around us, and we would have been firing 10, 15 years ago, whereas this year we held on and we got all that rain there at the end of June, 1st of July, and I'll tell you what, it made our crop. It just, but yeah, I think at least 5, 6, 7 bushel better than 10 years ago. And I know that's crazy, but genetics have come a long ways in the last few years.
There are absolutely still some problems out there, but it seems like the crop comments that I've heard come in from subscribers and farmers across the country, it seems like there's quite a bit more optimism than there was, a month ago, 6 weeks ago, whatever. Let's jump to export sales.
U.S. corn export sales increased last week. Net corn sales of 140,400 metric tons for the current marketing year were up 40% from the previous week, but down 47% from the prior 4-week average. Net sales of 758,400 metric tons were reported for the next marketing year, with the largest buyers being Mexico, unknown destinations, and Canada. Net soybean sales of 406,600 metric tons for the current marketing year were up noticeably from the previous week and from the prior 4-week average. Net sales of 1.1 million metric tons were reported for the next marketing year, with the largest buyers being China, unknown destinations, and Taiwan. And finally, net wheat sales of 567,600 metric tons were reported for the current marketing year, for the next marketing year, which is a marketing year high. Those were up 35% from the previous week and 86% from the prior 4-week average.
Look at those wheat sales, marketing year high. I know we're still overpriced compared to Russia and stuff, but we've had a couple of better looking weeks of wheat sales here.
Yeah, absolutely. I mean, that's an incredible number. I think that obviously the issues that you've got going on in the Black Sea region are, probably your biggest catalyst here. But I talked about this a little bit this week. I mean, whether you're talking wheat, whether you're talking crude, I mean, there's if you start lobbing bombs Ukraine to Russia, it's a little different than Russia to Ukraine, in my opinion. So,
Yes.
I think that there's some implications there. A producer maybe that has a locked in fuel needs for fall. I'm not saying it's not gonna that it's gonna skyrocket from here, but it could go haywire, if that trend continues that we've seen over the last several days. So, I think that was the biggest catalyst on these wheat sales. Is it's just easier to get wheat out of the U.S. right now.
New crop soybean sales have been a little bit better. We are digging in to the deficit versus last year. It's a 42% deficit versus last year in terms of the new crop book of soybean sales, 6.5 million metric tons. But that number was like 9 million metric tons and 65% a couple weeks ago. Same thing with corn. We're still 2 million behind last year, 26%. We're starting to put a dent in it. I don't know if that's going to influence anything that USDA says today, but it's not bad news. We had some inflation stuff out yesterday.
July CPI rose 3.2% on the year, slightly lower than expected, but up for the first time in 13 months. For the month, prices increased 0.2%, which is exactly what analysts were forecasting. The S&P 500, the Dow Jones, and the NASDAQ all responded positively with a 1% gain before pulling back, but they still ended the day in the green. Unemployment increased by 21,000 to 248,000, but remains at its lowest level since 1969. Whether the Federal Reserve raises rates at its upcoming meeting in September is debatable, but it's almost a given that increased rates are here to stay.
This is a big deal for farmers because it influences the Fed, which influences interest rates, and higher interest rates are one of the big challenges that is a new thing that we haven't seen in 15 years. Average operating notes like 8.5% now, where it was, of course, drastically lower than that. CPI, this was the first time we actually increased in terms of the annualized monthly change since June of last year. We had been down every single month. This is the bigger picture CPI chart. And what the Fed is worried about is like a second spike in inflation, kind of like you saw in the 70s. Like you had multiple spikes in inflation. You'd spike and then you go back down. You'd spike, you go back down. The Fed's going to play it safe. And I still think, Matt, like higher for longer is probably the trend here. So I don't think those 8.5% operating notes are going away anytime soon.
No, I don't either. Yeah, I mean, that's another thing I talked about a little bit this week is that, whenever you're used to, I don't know, let's say you borrow $1 million, typically, you're paying 40,000 in interest here a couple of years ago, if you had it borrowed the whole year, and most people don't. But if you did, and 90,000 is a little different ballgame. I mean, you got to start thinking about that's a cost of production that you have to start itemizing, putting in there. It changes where you can make sales and still make money. But by all means, I agree with you. I think interest rates are higher. And you and I have talked about this. The one beauty of it is that most of us that have bought land in the last several years have extremely cheap rates as far as our land is concerned. I think that if they're on like a 5 or a 10-year balloon, I would certainly want to get prepared to borrow as little as possible whenever I re-up because it's not going to be at 4% again.
Yeah, rates are going to stay high for a while. I think the Fed just they don't want to make another mistake. What did the cattle market do yesterday?
Had another positive day. Feeder cattle futures closed an average of $1.10 higher. Live cattle futures closed an average of 81 cents higher. Although there were too few of sales to trend in any region, there were a few sales reported in the Western Corn Belt at 188 to 189, and a few up in Kansas at 186, which was steady with last week. Choice box beef ended the day at 302.03. That was down $1.49. Select ended the day at 277.80. That was down 34 cents.
Matt, are you still at $2 cattle bull?
I am. I probably just need to get a sign, put it behind me. Yes,
Yeah.
I'm still $2 cattle bull.
T-shirt.
I get asked it by literally everyone. You know, the thing is, though, Joe, again, it's going to take a little time, I think, to get there. It is a futures market, so who knows? We could get surprised, but I do think when Kinsey and all these folks start, keeping these high dollar heifers, that's going to change everything.
No trade recommendations here, guys, just opinions. Outside markets this morning, U.S. dollar is about flat. Stocks are about flat. Bonds are about flat. Precious metals are about flat. Crude oil is up 17 cents, 82.99 in the SEP WTI. Guys, have a great weekend. Thank you for joining me. We'll talk to everybody on Monday.
Yep.